trading with a price target of 1,350. They're seeing, continued strong pricing power in the GB200 processor platform. They think Q1 quarter sales about $26 billion. They're also expecting the current quarter sales at around $28 billion, well above what we've seen in terms of consensus out there. So some strong words coming from some of the analysts.
Yeah, all right. Ahead of the earnings, nonetheless, should carry a little bit extra weight, when you're a week away. So that I think is, important too, because it's a pretty juicy price target. It's not just like they're, trimming up on the edges, checking their math. They're really kind of like updating the thesis on their data center growth, which, is where a lot of the AI sales are finding their way right now.
Yeah, absolutely. I mean, I think if you're an investor, you're looking at a company that obviously over the last 3 years up around 500%. You're looking at last year's revenue up 126%. The data center business doing extremely well. That revenue was up 217% for fiscal 2024. Now, on the same side of it, inflation data, these new tech firms releasing their own AI chips, as well as pressure for Chinese companies to start using localized chips. That could all put negative pressure on Nvidia. But we still have that global supply, that's remained constrained. Some expect it to continue to remain constrained from through 2024 and 2025 because of all this new AI technology, and that certainly is a good thing for Nvidia, who holds a huge market share on those AI chips.
All right, yeah, pretty bullish note, but it ain't moving the stock. So Nvidia, it seems like it got glued at 900 once it got back here. Got through that 850. That was a little bit of a challenge. And then it got to 9 and it just basically kind of hit a wall. So maybe it's not a level we can get through until we actually see fresh numbers. But these are certainly encouraging words from the analyst. And earnings coming up about a week away here, a little more than that next Wednesday.
During Google's recent I/O event, the company showcased many new AI solutions, and we all know that as long as big tech companies keep developing new AI models and technologies, they're going to need NVIDIA's powerful chips. Also, with how strong the AI competition is between companies like Google, Microsoft, and Meta, it's no surprise that NVIDIA is doing really well right now as competition pushes the need for its chips. But it looks like NVIDIA put the competition aside and decided to team up with Google's DeepMind. According to a blog post NVIDIA made, the two are teaming up to develop advanced AI systems for natural language processing. In today's video, we're going to tell you everything we know about this collaboration and discuss how it will affect NVIDIA stock and what benefits could come from it for the company. But before we do that, if you want to keep up with NVIDIA's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates. Now, back to today's video.
It's so easy to say that it's not undervalued, but then every time Nvidia reports earnings, it turns out to be hugely undervalued and the stock surges because they've been making so much more money than Wall Street expected. We think they're probably running out of room in terms of crushing the numbers to the extent that they have over the last few quarters. So I wouldn't call it, wildly undervalued. I think it's undervalued if you're a patient investor, you're looking at a year, 2 years. I think you could make very healthy returns. You can beat the S&P. So from that perspective, it's undervalued. But relative to the explosive move that we've seen in the last year or two, where the stock is up like 4 or 5 times, I don't think people should expect that kind of upside, over the next couple of years.
At Google I/O 2024, Google announced new partnerships with NVIDIA meant to make AI development easier and more performant for developers. They announced that NVIDIA is working with Google to optimize 2 new models it introduced at the event, Gemma 2 and PalaGemma. Now, these models are built from the same research and technology used to create the Gemini models, and each is focused on a specific area. For instance, Gemma 2 is the next generation of Google's Gemma models for a broad range of use cases and features a brand new architecture designed for breakthrough performance and efficiency. Meanwhile, PalaGemma is an open vision language model that is designed for vision language tasks such as image and short video captioning, visual question answering, understanding text in images, object detection, and object segmentation. Supported by NVIDIA's JAX Toolbox, PolyGemma aims to deliver state-of-the-art fine-tuning performance on a wide range of multimodal tasks requiring an understanding of both visual and textual content. These two AI models will be offered with NVIDIA NIM Inference Microservices, part of the NVIDIA AI Enterprise software platform, which simplifies the deployment of AI models at scale. Developers can now more easily build high-performance AI applications using Google and NVIDIA's jointly developed technologies. Google also announced support for NVIDIA Rapid CUDF, an open-source GPU data frame library, directly in Google Colab. This will allow Colab's 10 million monthly users to accelerate their workflows by up to 50x using NVIDIA GPUs without any code changes. Finally, the two companies also announced Firebase Genkit to simplify integration of generative AI models like Gemma into web and mobile apps. So, these are the new collaborations between NVIDIA and Google, and they're all considered incredible news for Nvidia stock investors. Let's find out why. Hello everyone, and welcome back to Investocracy.
And since you guys have brought up NVIDIA so much, and we're talking about AI chips, let's talk about what's happening on May 22nd. We know the share price is up 1% right now. It's hovering 5% higher in the last month, but that doesn't mean loyalty is gone. Jefferies estimates that AI as a percentage of total chip revenue will go from 5%, which was back in 2022, to 25% by 2027. So it's going to continue to drive growth, especially with all of these deep budgets and pockets from the hyperscalers that are promised to spend. And NVIDIA remains the favorite given its control over the entire ecosystem, the software that's included, as well as the launch of its new Blackwell GPU chip for the second half of this year. So speaking of NVIDIA, the early whisper numbers, we often look at this for NVIDIA specifically, and this is according to Wells, is that it's going to be $26 billion for the April quarter, and that's total revenues, versus the street estimates at 24.5 right now. That means out of that 26 billion, at least 23 billion has to come specifically from data center revenues. And you were talking about valuations. Analysts keep revising their estimates, surprisingly, for NVIDIA, just leading up to this report. And bulls would argue that the stock is trading at, 37 times forward PE ratio, and you compare it to AMD at 44 times. ARM, you wouldn't even compare because that's way higher, 70 times. But what's important for this company is how the stock reacts post-earnings. 16% higher in one day, like last quarter that we saw. There was, 24% the previous quarter. That's going to pull in more money into semis. Or is it going to go lower, and that's really going to drive momentum out and maybe into software?
For companies looking to scale AI, this full-stack technology collaboration aims to make state-of-the-art AI more accessible. So, in turn, this collaboration helps NVIDIA maintain its position as the AI market leader, as well as gain exposure to Google's customers, which could be potential NVIDIA customers. NVIDIA's leading AI position is what makes many investors still excited about the stock. After all, other leading players like Google are still talking about AI infrastructure demand, and NVIDIA's GPUs are the best on the market for AI training, with its customers buying thousands of them at a time to outfit their servers with the best technology possible. For example, Meta raised its long-term capital expenditure guidance to build more computing power to capture the massive AI opportunity it sees, while Tesla's CEO Elon Musk mentioned that they have about 35,000 NVIDIA H100 GPUs active, with another 85,000 slated to be up and running by the end of this year. If you're an NVIDIA investor and you're wondering whether the stock is a buy or not, especially as we approach the company's earnings report date, then this should really answer your questions. But one more reason why NVIDIA could be a great buy is that the company's upcoming product launches could drive another demand wave. However, investors should also keep in mind that expectations for NVIDIA are very high, both from investors and Wall Street. So if NVIDIA misses the mark in any way this quarter, there will likely be a heavy sell-off. In my opinion, that's unlikely because the heavy demand for NVIDIA's GPUs is still present. But the company's execution is unknown until investors see the financials. So, should NVIDIA report a less than perfect quarter, investors need to examine the situation more closely to determine whether the sell-off is warranted or a buying opportunity. Although the odds of this happening are pretty low, something as simple as a slip-up or a tone on a conference call can make or break a stock. Still, with how the industry currently looks, there are really no problems with buying Nvidia's stock before Q1 results, as it's slated to be another quarter of incredibly strong growth. If you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
I welcome back Alex Coffey and Kevin Green. Guys, Nvidia, 9 days out, not a lot of individual names are going to move the market, right? You're seeing the macro move the market and earnings move individual names. Nvidia, in 9 days, May 22nd, will probably move the entire market, guys. I'll go to Alex Coffey first. Alex, your thoughts. We're 9 days out. The stock is moving significantly just about every day. It's up about 1% today. What are you seeing?
Well, first off, you were saying it's probably going to move the market on its earnings. I'd make the argument that it moves the market every single day. At this point, it's trading at about a 60% implied volatility, and you're talking about a multi-trillion-dollar company. So few names, actually, I don't think any name has really ever done what Nvidia is doing right now in terms of its impact on the market, simply because most names that amass that kind of market cap don't trade with volatility 4 times that of the overall market. So you had that with Tesla for a little while when it was crossing that trillion-dollar mark a few years ago, when it would always trade at a pretty hefty implied volatility premium. But Nvidia's way bigger than Tesla ever got, and it's just as volatile. So it's as important to this market right now as arguably any name at any point in any market cycle.
It's not just us saying this, as many firms on Wall Street are bullish on Nvidia. Most recently, Wells Fargo analysts raised their price target on Nvidia stock from $970 to $1,150, according to a note released to investors. This new price target implies a potential upside of 21% compared to Nvidia's current stock price. The analysts cited Nvidia's strong performance and growth opportunities in AI, gaming, data centers, and the metaverse as reasons for the increased price target. And aside from Wells Fargo, CICT also recently raised their price target on Nvidia stock to $1,000 from $870, maintaining their bullish stance. Despite the bullish sentiments, many investors are still hesitant about Nvidia stock because one gripe about the stock has been how expensive it is, and that's true if you look at the company's PE ratio. At 76 times earnings, it could be considered outrageously expensive. But that doesn't do the stock justice. Nvidia is undergoing a massive transformation and is expected to post another massive quarter of growth. In fact, Wall Street projects 250% growth in Q1. As a result, looking at trailing earnings does investors no good. Instead, they should utilize the forward PE to value Nvidia. But still, at 36 times forward earnings estimates, Nvidia is far from cheap. However, this figure could be incredibly off the mark if Nvidia's growth continues. In addition to that, it's not far off from Microsoft, which trades at 35 times forward earnings despite growing much slower. If valuation is a top reason to avoid Nvidia's stock, you may need to rethink that, as many other stocks trade in a similar range as Nvidia despite not having the growth. But what do you think? How do you feel about Nvidia's new collaboration with Google? And what are your expectations for Nvidia's earnings? Let us know your thoughts in the comment section, and don't forget to tell us what your valuation for Nvidia is. If you would like to know what companies like Nvidia have been up to these past few days, go ahead and click on the next video on your screen. See you there.